Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Ford Motor Co. quarterly report. Ford Motor Company provides a wide range of businesses and services, including vehicle sales. Ford trucks sport utility vehicles, commercial vans, cars, and Lincoln luxury vehicles service parts and accessories for retail customers, digital services for retail customers, software development financing, and leasing activities, through automotive dealers' retail installment sale contracts for new and used vehicles, direct financing leases for new vehicles to retail and commercial customers, wholesale loans to dealers to finance vehicle inventory, loans to dealers to finance working capital, dealership facilities, and real estate. The recent surge in Ford Motor Co. stock price can be attributed to several key factors that have contributed to its 19.97% increase over the past year. A significant milestone was reached on September 26, 2025, when the company's stock delivered a 24.63% return year-to-date, reaching a new 52-week high of $11.99 USD. This impressive rise in value can be attributed to investor confidence and optimism regarding Ford's strategic initiatives and market performance. Notable news events that have positively impacted the stock price include better-than-expected third-quarter financial results, a 14% increase in U.S. sales for the second quarter, and an expanded market share. Additionally, the company's best first-quarter U.S. pickup sales in over 20 years and exceeding EBIT expectations due to cost improvements and strong net pricing in North America have also contributed to the stock price increase. Ford's decision to raise its full-year expectations for adjusted earnings before interest and taxes and increased its adjusted free cash flow target has further boosted investor confidence, driving up the stock price. Overall, these positive news events have collectively contributed to Ford Motor Co.'s significant stock price growth over the past year. The primary drivers of revenue growth or decline for Ford can be summarized into several key factors. On one hand, revenue growth is driven by the increase in Ford Credit Finance receivables and the growth of new segments such as Ford Blue, Ford Model E, and Ford Pro. These segments have seen significant increases in wholesales, favorable net pricing, and improved mix. On the other hand, revenue decline is attributed to decreased trade and other receivables, lower revenue from automotive sales due to reduced sales volumes in North America, and a decrease in electric vehicle spending. Additionally, industry-wide factors such as lower-than-anticipated EV adoption rates, recent termination of U.S. tax credits, and potential reductions in federal emissions and fuel economy standards have also contributed to the decline. Overall, Ford's revenue growth or decline is heavily influenced by these key drivers, which are interlinked with market trends, consumer behavior, and regulatory changes. Net income and profit margins. A significant improvement. The financial summary reveals a substantial increase in net income and improvement in profit margins for the company. In 2025, net income skyrocketed by 373% compared to the first 9 months of 2024, reaching $2,892 billion from $4,063 million. This significant growth can be attributed to various factors, including a decrease in provision for credit and insurance losses, an increase in net realized and unrealized gains on investments, and a reduction in finance receivables. Profit margins also experienced a notable improvement, increasing from 1.9% to 4.8%. This upward trend is largely due to the company's ability to manage its expenses effectively, as evident from the decrease in accounts payable and accrued liabilities. The substantial increase in net income suggests that profit margins have improved significantly, indicating a more efficient use of resources by the company. Overall, these changes demonstrate a positive shift in the company's financial performance, reflecting its ability to adapt and thrive in a dynamic market. The company is indeed generating positive operating cash flow. This is evident from the financial summary and supported by multiple sources within the report. On page 5, it is stated that net cash provided by operating activities for the first 9 months of 2025 was $12,395 million, a clear indication of positive cash flow. Similarly, on pages 79 and 83, the same figure of $17,398 million is mentioned as net cash provided by operating activities, further confirming the company's ability to generate positive operating cash flow. The company's debt level and interest expenses have undergone significant changes in recent years. Notably, the total debt has increased by 5.6% from $240,000 to $253,573. Furthermore, interest expenses on company debt excluding Ford Credit have seen a substantial increase, rising from an unspecified amount in 2024 to $820 million in the first 9 months of 2025. This significant rise in interest expenses is evident across various periods, with a notable increase of $548 million between the third quarter of 2024 and the first 9 months of 2025. The interest expense as a percentage of revenues has also fluctuated, ranging from 0.6% to 0.65%. Overall, these changes indicate a substantial shift in the company's financial landscape, with increased debt levels and corresponding higher interest expenses. The financial summary of Ford's performance reveals a mixed bag across its segments. On the positive side, Ford Pro and Ford Credit demonstrated strong performance in both 2024 and 2025. In contrast, Ford Blue initially showed promise, but later struggled in 2024 before experiencing some improvement in 2025. Unfortunately, Model E underperformed in both years. Management is expressing a cautious outlook for the company's future, citing various factors that may impact their financial performance. Key points include phasing out production of the Focus at their Saarlouis plant in Germany by 2025 and repurposing it into a technical center, shifting focus towards electric vehicles, EVs, with the establishment of the Ford Model E segment and emphasizing commercial, government, and rental customers through the Ford Pro segment, anticipating disruptions in production due to supplier shortages and taking steps to mitigate this risk, expecting adjusted EBIT headwind of $1.5 billion to $2 billion from Novelis in the fourth quarter. Delivering the Ford Plus plan to improve cost and competitiveness is crucial for long-term success. Management strategy involves investing in EVs, growing the business through strategic acquisitions and investments, repaying debt, and making finance lease payments. They also anticipate adjusting investments, spending, production, and product launches to match the pace of EV adoption. Overall, management is focused on adapting to changing market dynamics and regulatory requirements while maintaining a cautious outlook for the company's future performance. Acquisitions and divestitures overview. Ford has made significant moves in its business operations through acquisitions and divestitures. Notably, the company created BlueOval SK, LLC, BOSC, in July 2022 as a 50/50 joint venture with SK On Co., Limited. This partnership marks one of Ford's key acquisitions. On the other hand, Ford has also engaged in divestitures. The cancellation of an all-electric 3-row SUV program is one such example, although specific details on assets or liabilities transferred are not provided. Additionally, potential write-offs of compliance credit assets due to legal and policy changes may be considered a form of divestiture. Furthermore, the distribution of $3.1 billion to Ford as returns of capital from BOSC can be seen as a form of divestiture or return of investment. These transactions demonstrate Ford's strategic efforts to adapt to changing market conditions and optimize its business operations. The company has a history of paying out significant amounts to its shareholders. In recent years, it has distributed substantial sums in the form of dividends. Specifically, in 2025, the company paid out $2,522 million, while in 2024, this figure was $2,390 million. Furthermore, the financial statements confirm that these payments were indeed made, with a notable entry on page 83 indicating a cash outlay of -$2,390 million for dividend and dividend equivalent payments. Concerns about inventory buildup and supply chain disruption are mounting for Ford. The company's total inventories have increased by $1.558 billion between December 31, 2024 and September 30, 2025. Indicating a significant stockpiling of components and raw materials in anticipation of supplier disruptions. Furthermore, the automotive industry is facing significant challenges due to supply chain disruptions caused by factors such as tariffs, COVID-19 pandemic, and seasonal changes. The fire at Novelis Inc.'s plant has already impacted Ford's production, while suppliers' inability to deliver components on time is expected to be a headwind for the company. These concerns highlight the potential risks associated with inventory buildup and supply chain disruptions, which could have significant implications for Ford's operations and financial performance. That concludes the financial summary for Ford Motor Co. Feel free to comment below, and I will be happy to answer them when possible.